Very good afternoon, everyone. My name is Abhimanyu Arora. First of all, thanks everyone. Thank you everyone for taking out time this Friday afternoon. And here we are with our next webinar, the one of the most exciting webinars. We're following the same webinar once we did around a month back, wherein you can ask us anything in regards to SM REITs. So please, you can just type in your questions starting from now. We would like to answer each and every question. The format of this presentation will be, uh, I'll take approximately 10 minutes on the presentation, and there'll be Q&A round. First of all, wishing you all a very happy Diwali and a prosperous New Year to you and your family, to entire hBits community. Well, to start off with, just let me speak about the founder and the co-founder, Mr. Shiv Parekh, who is the founder and CEO of hBits. It's about the leadership team, which I'm talking about. He's a MBA from Harvard. He's done his BS in engineering physics from Stanford University. Forbes Asia 30 under 30 2022. Business World Disrupt 30 under 30 2022. His background and experience come from Citi and Stanford Management Company. Let's talk about Mr. Samir Bhandari, who is as well part of this presentation. He's our co-founder and CFO. He's a batch 1987 chartered accountant. In 1989, he did his MBA from IIM Ahmedabad. From 89 to 96, he was in Bank of America, wherein he shuttled between Mumbai and Hong Kong. From 96 to 99 September, he was part of UBS Singapore and chaired as a managing director. From 99 September till 2008 June, correct me if I'm wrong, Samir, you're part of JP Morgan Chase Singapore. And from 2008 till 2021, when you actually recently joined Lehman Brothers, and it was further taken over by Nomura Securities, I guess you were there till 2021, and you were taking care of entire fixed income equity, co-chairing global sales for markets, and you come with a diverse experience in almost each and every vertical. Well, to talk about this, before I start off, okay, let me just give you a little introduction about myself. Well, I was one of the first employees at hBits, overall 25 years experience. I worked with banks like HDFC, HSBC, DBS, and Singapore and Kotak. I graduated from Mumbai University and did my certifications of import trade, export, which is basically into foreign trade from Mumbai University, and corporate finance from IIM Calcutta. Well, just before I start the presentation, I would really like to, call in Mr. Samir Bhandari, because he comes with a great experience and talking to us about global markets, and with the recent developments of the FDI rate cuts. I'll, give your outlook if you can just give us, Samir.
Sure. Thank you, Abhimanyu, and welcome everyone to this webinar. Pleased to be here, and thank you for joining. So recently, as we know, the Fed governor, the Fed actually cut rates by 25 basis points. This was just a couple of days back, and Powell, the chairman, actually was a bit hawkish, alluding that they may actually not cut rates in December. But I personally do feel, given the job situation in the US, the jobless claims have been going up. The jobs data has not been very good. And despite inflation going up a little, I do feel the Fed needs to actually cut interest rates aggressively. So I do feel that in December, they will cut interest rates by another 25 basis points. And next year, I see the Fed cutting interest rates by at least 100 basis points. And this could be two interest rate cuts by June. And after that, we'll probably have another 2 interest rate cuts. So all in all, from now onwards, I would say another 125 basis points cuts in the US, which will take the Fed funds rate down from 3.25 for 4.25 to close to 3 or 275. Given that that's my expectation in the US, I do feel the RBI will also cut interest rates in India. probably 2 to 3 interest rates I expect to be cut next year. Main reason being inflation is under control, consumption needs to be boosted. So the RBI governor is very cognizant of the fact that the economy needs to continuously pick up. So I'm very hopeful that the governor will cut by at least at least 2 to 3 cuts next year. So around 50 to 75 basis points. Thank you, and over to you, Abhimanyu.
Thank you, Samir. Well, I'll just talk about the main topic, which is basically SM REITs. This is basically for the new joinees who have just want to understand a bit what SM REIT is all about, just to give a base to the call. What is an SM REIT and how is it different from traditional REIT? Well, SM REIT stands for Small and Medium Real Estate Investment Trust. Just to let you know, as we all might be aware of REITs, the REITs functionality is actually, or the volume number is basically between 500 crores and above, whereas in SM REITs, it plays between 50 crores to 500 crores. And that's what our approach is, that in the upcoming IPO, we look forward to get an asset anything between 250 to 500 crores. Well, it is of course SEBI approved, it's professionally managed. The only difference between the normal traditional REITs to SM REITs is that in SM REITs, it's an asset specific investment. And we focus only and only on premium leased, pre-leased commercial assets. Well, why are SM REITs being positioned as a fixed income opportunity? As earlier to this earlier slide, I mentioned about we deal into pre-leased commercial property. That means the property is already rented out, contracted for probably 4 to 5 or maybe 9 or 10 years. That means the rentals are fixed, so they will surely come. And in this particular scenario, we're looking forward to give an outflow of rental income every quarter to the subscribers to the IPO who've been allotted. So that is why being fixed income coming here, and that is why the SM REITs is being positioned as a fixed income opportunity. Well, the leases will be around 3 to 9 years. Not only the rental income, but when you exit this particular property, you are as well looking forward to receive a capital appreciation. Hence, the low correlation with equity markets. What makes SM REITs an attractive investment? Of course, it is SEBI regulated. Rental income visibility, you will come to know about the rentals and cash flows from day one, even before you sign the contract or even before you invest even a single rupee in this particular thing. Well, you can enter at a low cost as low as 10 lakhs. And of course, it's professionally asset managed. Well, what is role of SEBI in SM REITs? Well, of course, the main role of SEBI has been always ensures investor protection, enables listing and trading of units. Well, SEBI formalized SM REITs as a regulated product. It brings transparency, disclosure norms, and governance. As an update for new people, we got the SEBI nod on 1st of April 2025, and hBits will be getting the new product under the regulation of SEBI itself. Why it matters to the retail investors like us? Retail investors can get an access to a trusted institutional grade A commercial real estate asset. But I've already talked about quarterly returns and backed by SEBI SM REITs offer. Well, you can look at 13 to 17% IRR. The bits of it will be there in the following slide. Capital appreciation over time, quarterly cash flows, and ideal for long-term income-focused portfolios. A use case would be something like if you're investing a 10 lakh approximately into this particular asset or the kind of IP which we're looking at, you might be generating between close to 18 to 22,000 as a quarter. It's an indicative one. Of course, once you invest, you will come to the exact cash flow at the time of entry. Here is a small snippet of which we have done a comparison between FDs, bonds, and SM REITs. If you look at FDs, the average returns is 6 to 7%. Bonds is around 7 to 9%. And of course, while what Samir had recently mentioned that we'll see RBI rate cuts, so the average returns in FDs might go down. And SM REITs, which we are talking about as a subject, is 8% tax-free capital appreciation that would totally make us achieve around 13 to 17% targeted IRR. Well, I'll just call in Samir, to just make you explain what this 8% tax free would be all about.
Sure. I guess the way we structured the REIT is the 8%, the income which we will receive from the rent will be structured as a return of capital. So effectively, what it would mean if you had invested 100 rupees, every year you will receive 8 as return of capital. So after year one, your capital will actually reduce to 92. So in 5 years' time, your capital will, in your own books, would effectively become 60. So you would get tax-free returns for 5 years. And as and when you sell your share in the market, or we decide to sell the property after 3 to 5 years, the difference between the reduced capital and the realized value of the property, you would be paying as long-term capital gain. So it's a very tax efficient structure because firstly, you get to use the money 8% or 8.25%, whatever that is, quarterly, and you can actually use that money for anything else, and you pay long-term capital gains as and when you sell it only after 3 to 5 years. So it's a very, very tax efficient structure.
Great. Well, I'll be the first buyer to it. Of course, when it comes to tax free and looking at the markets going down, um, I'll not comment as like a yes, yes, but it will be a no-brainer to invest in such a portfolio because I'm a salaried person. I like to be a part of working and professionally, and someone is taking care of my investments in a very professionally managed manner, and of course, getting me higher IRRs. Well, liquidity, if I have to talk about in FDs, it is medium, bonds is medium. Uh, SM REIT, since it will be listed on the exchange, you can anytime, go ahead and exit the portfolio. So liquidity is high over there. Risk low in FDs, moderate in bonds, and low moderate in SM REITs. Asset backing, FDs none, partial for bonds, and of course, it is 100% completed and income generating pre-lease commercial real estate asset, hence it is backed. Payout frequency in FDs annual. Well, yes, there'll be a lot of people who might be saying they can go for quarterly. If we happen to choose a quarterly option or a monthly or a biannually option in FDs, automatically the compounding factor goes down and the ROI goes down as well. Hence, we've just taken an example, FDs being annual, and hence the average return is 6 to 7%. Bonds is semi-annual, and in SM REITs, we look forward to do around uh, quarterly. Well, what we as well foresee that in a time to come, since it is SEBI regulated, we might come down to a monthly payout option. Regulated by RBI FDs, SEBI regulates both bonds and SMBs. Tax treatment on FDs is fully taxable. Bonds, of course, it depends on the bond type. And in rentals, which is basically SM REIT, since Samir's just explained how the taxation work would work, so it is purely tax free. Well, balance, diversify, earn is the SM REITs in action, ideal for investors who want steady rental backed income, capital protection, and long term potential. Stability seeking investors want to diversify beyond equities, low volatility, but real asset exposure. If I happen to take such points in a use case example, a professionally building long term corpus, HNIs who are actually into investing and they have invested their portfolio into equities, they like to park such money into a particular portfolio where give them steady returns. They want to as well look at certain properties which are asset backed, which way they can see, have a touch and feel of it, as in they know which property they're investing. And of course, it is SEBI regulated. Well, for people, investors, they can as well look at this particular product if they want to choose as the retirement income or passive wealth creation. Well, this is, as we said, that we'll just keep a very small part of this particular cycle on the presentation. And please post in your questions. And we see already a lot of questions come in. So, Samir, I'll just call you in and I'll just ask the question which is there. So, I have Mr. Vishal Navlani. Do you have any properties coming up for SM REITs in Bangalore?
So Vishal, in fact, as we speak, we are looking at seriously looking at a property in Bangalore. It's between 250 and 300 crores. And we're in the process of signing a term sheet, which is taking a bit of time. But yes, to answer your question, we are looking at one.
Mr. Rajesh happens to ask, are SM REITs open-ended or close-ended?
So Rajesh, when we launch an SM REIT IPO, say for a property, say if it's a property in Pune, we'll list the IPO and you'll be able to subscribe to the IPO. Then the IPO is listed and it will be traded on the exchange. So effectively, you can buy or sell on the exchange then. And we will continue to come up with various different schemes for SM REIT IPOs. So you will not be able to buy the first one from us because it will be already listed on the IPO. But the second scheme with some other asset, when we come, you'll be able to buy it. So in a way, it's open-ended and closed-ended. So the first IPO will be closed-ended, but you will get an opportunity to buy other SM REIT IPOs.
Noted. Prateek Sarda, how SM REITs is different from REITs? What is the difference in return as compared to REITs?
So I guess Prateek, there are 3 or 4 differences really. One, a REIT can do under construction up to 20%. So a lot of their assets, 20% will be under construction and 80% will be completed and pre-leased. In SM REIT, we cannot do under construction. So that's one difference. Second, in a REIT, related party transactions are allowed. So for example, Embassy's own REIT, Embassy can park their own assets in the REIT. In SM REIT, no related party transactions are allowed, so which is a very positive for investors. Both are listed on the exchange. In SM REIT, the minimum ticket size is 10 lakhs. In REIT, it's 3,000 rupees or 2,000 rupees. Returns typically, given the fact that a REIT typically does under construction plus borrows in the SPV, the returns are around 6%. Whereas in a SM REIT, we expect the same returns to be between 8 and 8.25%. And one more difference in REITs is most of the subscribers to REITs are institutional large players. So GIC or some of the large mutual funds will supply. Whereas in SM REIT, we are encouraging retail to apply because retail otherwise does not get the opportunity to buy into institutional assets. So these are the major differences between SM REITs and REITs.
Thank you. Rajesh Nishani, if open-ended, how does the investor participate in the capital appreciation of the property?
So Rajesh, in this case, the IPO is done, so it's listed on the exchange. SEBI has told us that every year we need to value the property. So, and as soon as the valuation is done, this has to be then reported to the exchange. So assuming the property was at 100 and in a year's time it's 110, this will then be disclosed to the exchange. And once it's disclosed, automatically we expect the IPO price also to go up. Typically, you get at least 5% appreciation, 5 to 7% appreciation per annum based on rental increases. And if the demand is more, then it could be more. So because the disclosure is there to the exchange, I expect the appreciation to be between 5 to 7% if you hold the asset. Obviously, if you sold the units, then the benefit will go to someone else who's holding the unit.
Noted. Mr. Rajiv Gupta, what is the rate of return expected?
I guess, Rajiv, it's a combination of income plus capital appreciation. Typically, the income will be between 8 and 8.5%. And I would say the capital appreciation would be anything between 5 and 8%. So overall return, you could expect anything between 13 and 17%. Obviously, it's not guaranteed. The only thing which you'll know upfront is obviously the rental income because the lease agreements are longer term. So that you'll know. But the expectation is that you should get appreciation of between 5 and 8% per annum.
Question from Ilesh Karia. Can you highlight the taxation on distribution? How is it different from the main REIT? And it's got two parts to it. Why you don't distribute dividend? And second is, why is it distribution only repayment of capital? Is your investment in the SPVs largely as CCD slash debt, and hence the SPV returns that and you in turn pass it back?
Absolutely correct, Ilesh. We will do it as CCDs and debt, and hence we will keep a small portion, very small portion as interest, and rest would be return of capital. So the interest portion will be just 1% or 0.1% of the amount. And that's why we wanted to make it a very tax efficient structure, and hence did not want to show it as distribution of dividend. Uh, and it obviously helps in postponing your effectively your tax liability also. So we should have a note from ENY very soon, which we'll be happy to share with you.
Okay. I guess a similar question, Kanchana.
Yeah.
Then the next question is Sundar Singh Venkatesan. Good evening. Cost of inflation is added when calculated returns?
Sundar, in a way, yes, because typically when we have rentals, we will have a clause that it will either go up by 5% per annum or 15% in 3 years, which effectively boils down to 4.5% per annum. So in a way, it's already baked into the rental agreement. And so so in a year, in say 5 years' time, you typically will have the rental escalation almost by 30%, which then also adds to your overall return.
Okay. Mr. Kunal Sumaya wanted to understand is the capital is 100% safe and secure. What are the chances of losing capital money? Second part to is while exist how appreciation is being calculated. And third is while buying a property, how it's made sure that the valuation at which the asset is purchased is as per the market standard.
So Kunal, these are all great questions. So first, yes, the capital is 100% safe. A few reasons for that. One is it's a completed property. It's already pre-leased to typically either a multinational tenant or it's pre-leased to one of the large Indian corporates. You will know where the property is once we file the DRHP. So all the details of the property, all the details of the micro market will be given. So yes, to answer, the capital is 100% safe. How is appreciation being calculated? In two ways. So typically in a commercial property, Kunal, uh, uh, you buy a property on a cap rate and you sell a property on a cap rate. So suppose I enter a property at 8% cap rate. And when I go to sell a property after 5 years, assuming everything remaining the same, I'm still selling it at 8%. So all the rental escalation which you'll get will then be passed on to you effectively as capital appreciation. And this is not taking into account any interest rate compression or not taking account that commercial real estate demand is there in the market, and so the property prices go up. Which is why typically I expect at least 13% kind of IRR, going all the way to 17 to 18%. And how is the valuation done? So when we enter or buy a property, we'll get the valuation done from one of the large IPCs, whether it's JLL or one of the other IPCs, and these will be disclosed to everyone. Obviously, it makes sense for us also to get the valuation right, because when we want to exit after a period of 3 to 5 years, we want to make sure that we get the maximum capital appreciation.
Question from Lavanya. Lavanya, I've read the question. I guess it's a little different topic altogether. Let me just give you a call after this presentation and take your information on this particular one. Question from Venkat Raman Bhatt. When you say commercial real estate, are these malls or office building? If office buildings, are these SEZs or non-SEZs?
So Venkat, it can be a combination of commercial real estate. These could be malls, these could be office buildings, some in SEZs, some outside. Uh, So far, we've not done any malls, but I'm fairly confident we'll actually be doing this, doing malls also. But it will be a combination of commercial building, it will be malls, it could be hospitals, uh, it could be hotels. So anything which we think makes sense for our investors to invest
And there's a following question, by Mr. Venkataraman. Are you also
in.
investing in industrial estates?
Venkat, we could definitely look at that too.
Great. Lavanya, I'm sorry to miss out. If you can just type in your number itself here, it'll help me to just reach out quickly after this. Thank you. Mr. Vinod Kumar happens to ask, what will happen after 5 years if the property value goes down?
So we don't really expect that to happen, honestly. But if it does happen, obviously we will be, as I mentioned, we will be taking the valuation of the property every year, and this will then be disclosed to the exchange. Now, if the value of the property goes down, then it's possible that your units, which were trading at 100, maybe then trade at 90 or 95. But as I said, the chances of that happening, especially to a commercial property, is very limited.
Okay. So there is a question, how will I be able to sell units after listing? Just in case for emergency, I need to pull out. How this works, will I be able to sell, or as demand supply is not like stocks? Also, if I stick long term, how does it work?
So, firstly, you can sell your units anytime in the market. We will also have some market makers who will then help you in existence, and we could also definitely help you. But I do agree, the liquidity initially, especially, may not be as good as stocks. But our endeavor would be to increase the liquidity. Long term, if you stick and hold it, as I mentioned, the NAVs are going to be published to the exchange, and as the NAVs go up, your prices of units should also potentially go up.
Question from JC. Rental income should be ideally charged as marginal rate of taxation. So how come this will come as tax free?
So, as JC already explained, this
Yeah.
will be treated as a return of capital, which SM REITs allows.
Question, in a scenario where full principal for the debt is paid back by SPVs, which shall happen sometime in the life of REITs, how will the distribution mix change, and what nature will be of it all?
So this we will be looking at that. So typically in 12 years time, your principal value would be zero. So in fact, we are discussing with our tax advisor how would it actually work after that? Would we be selling this into another SPV? And the advice is being sought from our tax people. So we'll definitely let you know. But this only happens, I guess, after 12 years.
Question from Pratik Sarda. How do you manage NRI investment, entry and exit? Well,
So present, maybe you want to answer this?
yeah, so it's going to be in the similar fashion how resident Indian is investing. While you are looking forward for investments through a DMAT form, same is going to be your channel, how you invest into it, and it's going to be taken care of in a similar fashion. So there is no different rule altogether. But yes, in this particular format, resident Indians can invest, NRIs can invest. If you can invest from an HUF, a private limited company, a LLP, even a limited company can invest. Only thing, if when it comes to foreign nationals, they have to look at certain norms when it comes to FDIs. Question from Mr. R. Ganesh Kumar. Want to understand safety.
I guess, Ganesh, I would say that given the fact that these are typically grade A properties, typically we'll have rental income coming. So it's fairly safe. I would say on a scale of 1 to 10, safety is almost 8. The only risk I would say, Ganesh, you need to keep in mind is if the tenant leaves, and for any reason, it takes time to get a new tenant. So for that period, the rental income will not be there, but your capital will always be safe. So I would say, and given the fact that it's a SEBI regulated product, I do not think you should be concerned about safety at all.
My smile actually comes from the next question from Satish Kanade that he mentions, and I'll be open to all question what his question is. Eagerly waiting for the IPO. This is my third seminar, and now waiting eagerly for the IPO. Well, just to let you know, Mr. Satish, and of course, Sami would second it, we are eagerly waiting for it as well. We are aggressively working on to close the particular thing. Please remember, it is a real estate, so there are a lot of legal formalities, checks, due diligence, and since SEBI is as well involved, we need to take care of the entire compliance. Anything you want to add, Samir, to this?
No, Satish, in fact, we've got to be extra careful,
Good.
obviously, given the fact that it is hard-earned money of our retail people. And it's very important that we get the right assets. Everyone can make mistakes, but we try and avoid the mistakes as much as possible. So that's the reason we never rush into anything. I can definitely add that we are presently looking at one property in Bangalore, two properties in Mumbai, one property in Delhi, one property in Pune, and we are very, very close to doing something. We are negotiating term sheets. So definitely we'll keep you guys informed. But it's the primary thing is to make sure that the property is good and we don't make a mistake.
Great. Mr. Sandeep Bhilwankar happens to ask, what about risks and consequences?
Um, I guess to address consequences, obviously it's a SEBI regulated product. The endeavor is always to do the right thing for our investors. But you always have access to SEBI if you want to, if there's a complaint or anything, of course. Risks, I feel the main risk is really the tenant leaving and it taking us time to get a new tenant, which is possible, right? I mean, it's something which we see in residential also when we have our own properties. Sometimes when the tenant leaves, you can't find the tenant for whatever reason, right? But that's really, I would say, the only and the main risk as such. There are not too many other risks. Like I said, capital, I do feel is fairly protected. And plus, with SEBI regulating it, they always protect the interests of the investors.
So I have a question from Mr. Manish, and there's a following question in relation to that. I'll answer that. Any nearing opportunity in Pune, Mumbai, Gurgaon? We've already answered that. Yes, we're looking out for property in Mumbai, Pune, Gurgaon, and Bangalore. Question from Ajay Malik. How do you compare yourself with the likes of REITs by Brookfield, Blackstone, Nexus, etc.?
I guess, Ajay, obviously, Brookfield, Blackstone, Nexus, these are much bigger. So if you see each size of the REIT is 5,000, 6,000 crores, they really cater to the institutional players. They do not, I don't think they cater to retail or high net worth. For them, the objective is to get the money from institutional players like GIC, Temasek. So if you see their investments, each player will put in 500 crores, 750 crores into that. We are developing a market where we can get retail and high net worth to buy into and get institutional grade properties. And that's really our objective. Presently, SEBI's allowed us up to 500 crores. I'm fairly certain if we had 1,000 crore asset, we could go to them and ask them to allow us. So that's, I would say, really the really real difference, where we are catering to a segment up to 500 crores.
Question from Matthew Tarakan KM. When is your IPO scheduled to be launched?
Matthew, we are working very hard on it. I'll be very honest. I mean, unfortunately, the 1 week Diwali, it was all closed. So we are getting very close to signing a term sheet. I'm hoping by March of next year we would have done at least 2 or 3 IPOs. So one could be in Jan, one could be in Feb, one could be in March. So that's really the objective, trying to do as many IPOs before March end.
So just repeating it, by March we'll be completing 3 IPOs, right? So, so not to worry, we will surely love to have your investment. Mr. Shivakumar MS. Are there any data centers projects coming up where hBits is involved?
So, Siva, the biggest issue with data centers is the investments are very, very large. Typically, data centers, as you know, investments could be 3,000, 5,000, even 10,000 crores. So presently, we are not involved, but any smaller data centers, we would definitely like to be more involved. We are working on a lab though. It's a laboratory which is on a long-term kind of lease. It's a good asset, 200, 250 crore asset. So if that goes through, that could be very, very interesting.
Question from Parag. Major difference between fractional ownership and REITs as a product and taxation wise?
So I would say three, four differences between fractional and REIT. Fractional is unregulated, and SM REIT is regulated by SEBI. Fractional, the ticket size was minimum 25 to 30 lakhs. SM REIT is 10 lakhs. Fractional, it was not listed on the exchange. SM REIT is listed on the exchange. Taxation, fractional, the rental was taxed at the highest tax bracket, your tax bracket. In SM REIT, it would be tax-free and treated as a return of capital. So I would say these would be the major differences. Some other nuances, I would say fractional, the property sizes were much smaller. We would typically do not more than 50 to 60 crores. Here in SM REIT, we would be doing probably minimum 200 crores all the way up to 500 crores. And we think in the SM REIT, the liquidity will be a lot better than fractional.
Question from Mr. Amitabh. What is the management fees to be charged by hBits, and is the rental income that you explained is guaranteed?
So management fees, we haven't decided. It could be anything between 0.5% to 1% in SM REITs, but we really haven't decided that. The rental income is guaranteed in a way that you will have the lease agreement. You will know the tenant. So if the tenant is, say, a Tata Group company, you know that the Tata Group company typically will not default on a rental income. So in that way, it is in a way guaranteed. But you'll be able to see the leasehold agreement, how far is it, everything, all the details will be given in the DRHP, which will be filed with SEBI.
Mr. R. Ganesh Kumar, since it is specific, property specific, it may have safety risk related to property.
Not really, because we will do the due diligence first. And the due diligence typically is done by Shardur Amarchand Mangaldas or Cyril Amarchand Mangaldas. So there's no real safety risk as such. Plus, obviously, all the properties, as you know, are insured. And they typically will have multiple tenants. Instead of one tenant, we may have multiple tenants. And if it's one tenant, then it will be a triple A kind of tenant. So we try to mitigate the risks as much as possible, and there will be no under construction risk.
Question from Rajesh. The returns for investors are of two types. One, by the way of flow through the rental income, and second, the way of capital appreciation and the valuation of underlying property. For the capital appreciation price, how does the investor gets the benefit of same?
So Rajesh, there are two ways of benefiting. One is since we will be disclosing the asset price onto the exchange on a yearly basis as suggested by SEBI, that will be shown in the price of the unit on the exchange. So that's one. And we plan to sell the properties in 3 to 5 years' time. And when we sell it, obviously, you will also see the capital appreciation. So as long as you're holding the units at the time when we sell the property, or at least for a year to see the capital appreciation, you will be actually getting the capital appreciation.
Question from Matthew. Can we be sure for assured allocation in your IPO?
Matthew, there's no surety, because if the IPO is massively oversubscribed, then it's typically a lottery system, which is given by SEBI. So we will have to stick to that.
Rajiv Gupta, whether InvITs like Power Grid InvIT or better or same SM REITs. Why?
I would say they are different, Rajiv. InvITs like Power Grid and all, they typically have more income. They're longer dated, and you don't really get capital appreciation. And I think the taxation is also a bit different. In SM REITs, what happens is you not only get income, but you get capital appreciation. InvITs typically will give you around 11% total return. And I do feel SM REITs can give you anything between 13 and 17% and are more tax efficient.
Question from Vishal. Vishal, I'll give you a call after this. Mr. Vijay Kumar happens to ask, do I get to choose properties across markets once it is listed on the hBits products? Can I invest before IPO? If so, what is the process?
So Vijay, firstly, yes, you can choose properties across different markets once it's listed. They will be doing IPOs in different cities, so different properties in different cities, so you can invest in whichever one. Yes, if you want to invest before the IPO, definitely talk to our salespeople. So you can give Abhimanyu a call before that, and we can decide how to make sure that we can help you with that.
Surely you can write to me at abhimanyu@hbits.co. Spelling is just mentioned on the screen. And more than glad to give you a call and take questions on that. Mr. Venkatraman Bhatt happens to ask, when you say SM REITs buys institutional assets, what type of institutional assets these are? Please elaborate.
So Venkat, typically when I talk about institutional assets, see, these are probably grade A assets, large assets. They're at least 300, 500 crore assets, which typically individuals would not have access to. And also the tenants are typically large multinationals, large Indian corporates. And the quality of these assets is very, very good. If you see individuals buying 5 crore, 10 crore assets in commercial, you will not get the same quality of tenant. You will not get the same quality of construction. So that's really, really the difference. What we are trying to get is getting the best quality of assets, which are termed as institutional assets, to individuals who want to invest 10 lakhs and get a slice of that. And that's what we are trying to do.
Question from Manoharan. What is the time frame of selling the property and return of capital? Is it mandatory to sell when within the time frame? Is there any chance you will not sell it even after years?
The good part, Manoharan, is we are under no pressure to sell the capital and return of capital. Unlike a fund, this is effectively perpetual capital. We will sell it where we think the time is right and where we get the maximum capital appreciation for investors like you. Typically, I would say not less than 3 years, could go up to 6, 7 years also, but the period typically will be between 3 and 6 years, I would say.
Right. So in the start of the call, Samir, you mentioned about Fed rate cuts, following to which we saw the RBI rate cut. So we have a question from Mr. Soham, which says, what will be the impact of rate cut by the SBI on SM REITs?
By RBI.
By RBI.
Cut by the RBI on. So effectively, Swam, the way it works is when rates are cut, obviously cap rates also go down. So rental yields, which are 8%, could also come down, which means your capital starts to appreciate. So if the cap rate comes down from 8 to 7%, typically your property will go up by 3 to 4%. So this cutting of rates by RBI helps the capital values of all SM REITs.
So I have a question, similar question, already been answered on tax-free. If I just go back to the next one, Mr. Vinod Kumar, capital depression happen?
Vinod, as I said, highly unlikely. Never say never, I'll be very honest. But I would say very highly unlikely that your capital would go down.
Clearly, the reason behind one more thing is just to add in a point. when we enter into, like, everyone is asking when is the IPO comes in. People surely look at the rental yields, but at 8bits we really want to look at the right entry price point. We see a lot of properties overvalued in the market, but we want to get the right value. So major area where I see the capital depression happens is where when you look forward to get a property and the entry valuation was not right. So just added a point over there. Question from Mr. Darshanesh Chavra. Can we discuss last 5-year IRRs in hBits properties on different properties? Can I?
So Darshan, a few things. One is we just sold a property after 3.5 years, where we gave an IRR of 14.5%. One earlier property had been sold at 18% IRR. Most of our properties, I would say, are trading at least 15 to 20% above where they were actually bought. But if you want details of some of the properties, Abhimanyu would be happy to give you separately. Please do get in touch with him, and we could list some of the properties where we've had capital appreciation.
Sure. More than glad to have a word with you, Mr. Chavra. A question from Vinod Kumar. Rental yearly increment will be there? Yes. So already answered by Samir, where rentals are either 5% yearly increased, or it's a 15%. It's basically subject to a contract. It's different for every property. Question from, how can we study corporate governance and ensure that the company is not involved in frauds and that the management is trustworthy and small and mid REITs?
Great question. Firstly, we are registered with SEBI. So if you go on SEBI's website, hBits will be registered. You can actually see that. When we file an IPO, you will see the DRHP, which will also be listed on SEBI website to make sure that we are legitimate. And of course, on our website also, you will see all the details of the property, the legal due diligence, the rental agreements, and all these three put together will convince you that we are legitimate.
Question from Satish. If the rental goes up, when will return of capital will be equivalent to the increased income?
If the rental goes up, yes, then return of capital will be equal, yes, because when we sell the property, it's sold on cap rates. And if your rental has gone from 8 to 9% and you're selling the property at 8%, yes, you're absolutely right. You will get that incremental as capital appreciation.
There's a question which has around 5 pointers. What is the process of buying SM REITs? How will I get to know when I need to buy one? Well, you'll be able to. I'll request you to just have follow us on LinkedIn, be a part of the platform of hBits. You'll automatically get a trigger, and please regularly visit our website. The presentation is always for the next webinar is or registration is always on. You will come to know about that, and we'll make it a point that from a branding and marketing help, we'll be able to reach out to you. Second point is IPO subscription. What does it mean, Samir?
So typically we will go to the market and it will be an SM REIT IPO. It will be open typically for 4 days, and you will have to subscribe to the IPO like you normally apply to any IPO. You would have to have a demat account and a certain process, the APSA process you'll need to follow. Subscription time, as I said, will be around 4 days. But before that, you will know that we will be marketing this because there'll be a lot of ads and there'll be a lot of marketing effort, which we will be making. The rental income, as I mentioned, will be shown as return of capital, and this will pay to you every quarter. And if you miss subscribing to the IPO, then you can go and buy, because it's going to be listed on the exchange. You can buy it from there, or you could also invest in the next SM REIT IPO, which we will be coming. And as I mentioned, we'll be regularly coming with different SM REIT IPOs, which will be different building in different cities.
The next question is, Lucania properties registered in SEBI platform when it is expected? Well, that property was under the erstwhile fractional ownership way to work on it. Any questions pertaining to that, please let me know. More than glad to have a word with you, Mr. Manoharan. JC, so rent collected is returned in the form of return
Yeah.
of capital? Yes. Rohit, okay, incremental clause, they are good. So yes, there will be an incremental clause in the rental agreement, which you will come to know in advance. Question from Soham. What do you think? Where do we stand right now in the reality and REIT cycle?
So I think this is one of the best times for two reasons. One is interest rates definitely are coming down. There's a lot of demand for commercial property as more and more offices uh, are opening up here. And demand for good properties is very, very high across the board, across Bangalore, Mumbai, Pune, across the main cities. We are seeing a lot of demand. So I personally think it's one of the best cycles, and as rates continue to come down, this will really benefit the SM rates.
Correct. Siddharth, in terms of returns, should we compare SM REITs versus other fixed income assets like FDs, or we can compare it to the large cap mutual funds, or to given it the time horizon 3 to 4 years? Well, all of them is surely a comparison which you can look at. Anything, Sami, you wanted to add?
Yeah, so Siddharth, that's a great question. So, uh, uh, my suggestion is to compare SMB to not only fixed income instruments, which we spoke about earlier, but also to large cap mutual funds, right? If you see large cap mutual funds over long periods of time, give you anything between 11 and 12% IRRs. Whereas SM REITs, we think could actually give you returns of 13 to 17% and are also backed by a real asset where your capital effectively is protected. So your comparison should not only be to fixed income instrument bonds, but also to large cap mutual funds where SM REIT returns are actually higher than large caps.
Question from Ilesh. It's basically in lines with the example which you gave for the return of capital. How can interest form such a small portion? Sorry if you can spend a minute talking about it. Say 500 is the value of the asset and rental is 45, 9% yield, assuming 80% or more of your capital is investing as debt, which means 400, which you interest is 40 rupees, which means after 5 is the return of capital. 5 rupees after, no, I guess if you can just share the example, Samir, again, probably can.
So, Elish, it's basically let's take the case where you invested 100 rupees. The rental portion is say 8, and we are showing say 8 as return of capital. So every year you will keep getting 8. After 5 years, your capital would have reduced from 100 to 60 after 5 years. What that basically means is if you sell your asset after 5 years at say 120, you would be paying capital gain on the difference between 120 and 60, which is 60 rupees at 12.5% long-term capital gain. I hope that's clear.
Uh, Question from Sohan. What if happens if the large corporate that recently leased the building goes bankrupt and stops paying rent? Do we still get our returns?
So Soham, if in the unfortunate case that happens, we obviously will have a security deposit for 6 months from them. So that's one. Secondly, legally, we'll obviously go after them. Uh, but the thing is, if they go bankrupt, they stop paying rent, we obviously have to find another tenant. Until we find another tenant, obviously your returns or the rental returns will not be there.
Question from Rohit. Rent is income, other expenses regular and yearly like our home or office?
No, so in this case, we are going to treat it as a return of capital, and all the income which you'll get will be all after expenses. So all the other expenses would actually be charged, and this will be net of all that.
Question from Pratik. What if the tenant leaves midway and breaks the rent agreement and the property? It's the same question, which is already answered. Uh, Question from Abhimanyu S. What is the expense ratio or fees of for SM REITs?
So, Abhimanyu, so far we've not really decided. SEBI does not have any base case of what the expense ratio should be for REITs also. But as and when we have clarity, we'll definitely let you know.
So, question from Vijay: is there a defined timeline for sale of the asset once the property is listed in stock market to realize the capital gain? Well, there is no timeline, as Samir mentioned, that there is a particular which will look the cycle suits best. Could be any time between 3 to 6 years. Question from Sandeep: what is the impact of economic cycles on the product, on this product?
So, Sandeep, like any other asset class, obviously economic cycles affect every asset class, right? So, if the country goes to a downturn, or if the country goes into a recession, obviously the people are not able to pay high rentals, then definitely that will impact. Or if the US goes through a massive recession and you don't have GCCs coming into India, setting up offices, that will also have an impact on rentals. Typically, unless it's a very deep recession, which carries on for some time, normally these kind of impacts should not be there more than 6 months to 12 months. Mainly because today all the central banks have become very active, right? And there were a lot of tools in their hands, whether it's monetary policy, whether it's fiscal policy, to make sure countries don't go into deep recessions. So I don't foresee that happening, but definitely impact of economic cycles definitely will be there.
Question from Pavani. Can you please let me know how frequently you are going to see the property once listed on exchange? What we can do after getting the money back? Can we reinvest immediately or we have to wait?
So, Pavani, as we list more and more properties, suppose we have 5 schemes which are listed, you could sell from one scheme and go to another. But if you were to invest in the IPO, then you'll have to wait for us to get another IPO. Initially, we plan to do by, as I said, by March to do at least 2 or 3 IPOs, and next year we plan to do at least 6 to 8 IPOs every year, and the frequency will only increase as we become larger and larger.
Sure. Question from Matthew. Can we apply for IPO using your existing Demat account? Yes, you can. Question from Kunal. Can HF invest in SM REIT? Yes, you can. Lavanya, yeah, I got your details. I will take a snapshot from my phone. I'll be sending an email since you're in Scotland right now. Mr. Venkatraman Bhatt, can we know hBits history and other ventures of hBits?
So,
Yes.
Venkat, sorry, go ahead,
Yeah.
Avi.
So yes, Mr. Venkataraman, you can just drop in. I can share a corporate deck with you. You can talk, get to know all the hBits. Having said that, you can just visit our website. And why I'm running is not because of the timeline. It's I see there's another 30, 40 questions, and I can share the entire deck with you. Mr. Venk, what are the risk factors in a worst case scenarios? Yeah, I'd love to.
Venkat, yeah, Venkat, as I said, in a worst case scenario, let's talk about massive economic recession. Uh, uh, and so obviously when you have a recession, interest rates will come down quite a lot. So that obviously benefits in a way capital values. But having said that, then obviously tenancy vacancy becomes a big issue. So my guess is the biggest risk factor I would say is more tenancy vacancy, where because of recessionary factors, you can't get a tenant on time, and for that period, your income rental income is not there. My guess is that's the main risk factor. If you talk about capital values, typically capital values will come back if the building is good and if the building is in a good condition. So the only real risk factor will be the tenancy. I guess one more risk factor could be interest rates go up very sharply, right? Today we have interest rates at 5 to 6%, and they go up to say 15%. Now, highly unlikely, as I said, in the recent scenarios. But if that happens, then your capital values actually come down. But it doesn't mean that you have to sell it because the asset is still there. But definitely the units which will be listed on the exchange, the prices will come down if interest rates go up massively. One good thing in SM REITs is we are not planning to borrow in the SPVs, and there is no under construction property. So those kind of risks are not there.
Right. So question from Pawani, if I buy SM REITs after listing, how my rental income will be paid? Well, it will be paid out quarterly and it will be paid out to the linked account of your DMAT. Question from JC, what is it in for hBits? Do you charge a fund management charge or is it built-in expense ratio? If yes, how much is it? I guess we just answered this question. Part of the kind of a charge, which is going to be as well mentioned while you apply for the IPO. The management fees or the expense ratio will be mentioned in our IPO listing. Right now, we have not decided on that as of now as we speak. Question, Samir, will you be also investing your money in the REITs?
So I guess one is, as a sponsor, hBits, we have to invest 5% of our own money. So that's more from hBits perspective. As an investor, if I were to think of it right, given the fact that it's tax-free income, given the fact that it's listed on the exchange, given the fact that it's regulated by SEBI, so it has investor protection, I would say I would definitely invest in it because I know I can get exit if I have to really sell in the market. Until then, I can actually enjoy it. So 15 to 20% of my assets, there is no reason why I should not be investing in this. And I do invest in REITs. I mean, I'll be very honest, I do invest overseas in REITs for income. So rather than taking a fixed deposit or rather than taking large cap equity risk, I would definitely invest in this.
Question from Prateek. Follow up to this, is there any responsibility hBits will take to get a new tenant in a time-bound manner because my rental yield is at stake?
Pratik, we will obviously take all the endeavor to try to do as quickly as possible, right? I mean, we also would like that there should not be any break in tenancy. But unfortunately, sometimes, sometimes beyond your thing, right? You keep trying, but sometimes the tenant takes a bit of time. So yes, uh, I, and we as an asset manager obviously don't earn any fees when there is no tenant, right? There's no fees to be earned. So obviously we also in a way lose out with you because of that. But definitely we'll definitely try and make sure that we can get a tenant in a time bound manner.
Question from Harsh, how is rental income tax? As Samir has already mentioned, it will be return of capital. Uh, Prateek, is 8% net return or gross return? Well, we've been talking about 8% tax-free. It is a kind of a example number, but we'll be publishing the number as per the IPO, what we'll be sharing with you. So please treat it as tax-free. Dinesh Adhika Happiness, when you say return of capital, how the workings for tax-free, we'll just explain this already. A question. So you mean, there's one more question. So you mean as we are doing it for the first time, the money we put in for an IPO in March is not going to be for that property by another property?
No, so we will be launching an SM REIT IPO. And when we take the money from you, it will be going exactly into that property. If you put in March, if there's another property, then that will go into the other property, but you will know exactly where your money is actually going in.
And there's a question, is there a already listed property by you that I can see on the market right now? No, we don't have a listed property as of now, and we look forward to get that in January. What is the minimum investment ticket size? How can one invest, retail or only accredited investors? Well, you can invest through your DMAT, and the minimum ticket size to start off with is 10 lakh rupees. Question from Amitabh Sethi. Will hBits also invest in own funds in the commercial property in terms of having the skin in the game? As Samir just mentioned, as a sponsor capital, 5% is contributed by the hBits itself. So yes, there is a skin in the game. In addition to the earlier thing, as Samir just answered one of the questions on the management fees, if the asset is not there. So we only earn management fees out of the rent. So if you're getting rent, that's the term when we earn the management fees as well. So question from Shweta, are there any companies who have currently launched SM REITs? And what are the transaction costs, hidden cuts by the which we are aware of? Well, there is a company called Property Share who's already listed two SM REITs, which you can surely look at, and they listed on the exchange. In terms to transaction costs, hidden cuts, we'll not be aware of. It's best to be available, and if you can see the particular the IPO prospectus, you'll be able to see that over there. But we'll more than glad to share our IPO prospectus once it is launched. Question from Jagmohan Taneja. When the IPO of your REIT is likely to come out, when is the IPO? So we're looking at January. For listed companies, banks and stockholders are allowed to canvass business. Yes. In what way can we be accommodating or for canvassing? So, Mr. Taneja, you can reach out to me. I can just take you through on the process and how this can be taken care of. Question from Priya S. What if the asset becomes vacant or less than 6 months? Uh, when in the case of the rental part of retail investors going to be impacted? If the assets, I guess the question is already been covered in terms to if there's any particular time when the tenant leaves the particular property, which is the only risk which we see, but we try to mitigate that to the best levels. Question from Dhyanidhi V. Any legal disputes so far in the REIT segment? No, there have been no. On SM segment, no, there have been no legal rights. Uh, Venkatraman Bhatt, are you planning to invest in tier two towns, hotel chains, large pilgrims, or tourist places? Yes, we might be. But at this moment, to start off with, we are looking at currently Mumbai, Pune, Bangalore, Delhi NCR, and could be Hyderabad and Ahmedabad. Question from Jagmohan Taneja. Why your focus is not on the properties now? Yes, we are surely looking out of properties in Delhi NCR. Indeed, we are in discussions of negotiations, and we'll surely update you on that, Mr. Taneja. Question from Santosh S. Where can I find your company previous project data history, including every year rents and sold the total profits? Yes, Mr. Santosh S. You can just write me on abhimanyu@hbits.co. Let me share the corporate deck, which will showcase the entire history and the data which you will be looking for. Question from Shweta. Does the IPO allotment work similarly like regular IPOs in case of oversubscription? What happens if the IPO is subscribed? Yes, clearly, Shweta, yes, it surely works in the similar regular IPOs. And yes, if it is oversubscribed, as Samir mentioned, it will be as per the lottery system. But we'll be more than glad to see you as our investor. So let us know pre-IPO if we have something, we can try to do that. Santosh question is, are there any SM liquidity will be liquidated in future? What is the typical holding period? Well, there is no, as of now, the SM REITs currently, so we don't look forward to liquidate anything. But the typical holding period for having an SM REITs or product listing would be somewhere anything between 3 to 6 years. Question from Rajesh Nishani. Out of the various currently listed SM REITs, which one do you think from a valuation and IRR standpoint can be considered for investment? Samir?
So Rajesh, I guess there are only two listed SM REITs which are by prop share. So I guess you will have to look at whether you are comfortable with those properties. I mean, I'm sure the due diligence was done by them, but you'll have to look at from a valuation IRR point of view. So we look at our own SM REITs. So hence I do not want to comment on someone else's SM REIT.
So, question from Rajesh. If I'm selected the live lottery in IPO 4 days, then my money of 10 lakhs and I will not be debited. Sorry, I'm not getting the process of what this IPO subscription, what I am going to buy. Well, no problem, Rajesh. Let me share. It's a regular IPO, how thing is taken care of. And I can share a note on how what the IPO process looks like because it involves ASBA, your DMAT account details, how to be traded. So it's a pure IPO process, which I can share that with you. Question from, yes, Jakmohan, he just asked me, will it be subscribed through ASBA? Yes, most likely through ASBA. Sundar Singh Venkateshan, as real estate cost of material is reduced after budget, will it hit cost of appreciation of old REITs? Samir, any input to that?
What's the question again? Sorry, as real estate cost of material is reduced after budget, will it
Hit cost?
of appreciation of? No, I don't think so because firstly, the cost of construction does not really determine where the price of the offices is. if I'm reading you correctly. Uh, because offices work on different ways, right? It works on the cap rates. As long as your cap rates are a certain level, prices of offices will remain the same. So I don't just because cement prices come down, I don't think that will affect your price of your office space.
I guess, there's a follow-up question from Ilesh. Ilesh, I guess, let me share the working and the, ANY note with you. I guess I should be having that treatment of taxation within the next 10 to 15 days from now. Let me share that, then that particular way, how it's been treated, and the thing will be
Yeah.
clear.
So
Uh,
Ilish, I think that's because I think best is it's may not be able to answer it here because you want a lot of detail. So we'll get Abhimanyu to send you all the details, and you can have a one-on-one conversation with him around the tax.
Well, surely looking forward to have a conversation with you, Vilesh. Looking forward to that. Question from Santosh. If the annual returns are considered as a return of capital, returns are exempted from the taxes? Yes, they are. A question from Santosh again. How do you ensure tenant is financially strong and renting for long term? Well, before the tenant comes into the property, we surely look into the contract, that is a rental agreement, which clearly shows the what do you call is the duration, the timeline, the lock-in period. Generally, the lock-in periods which we're looking out for these assets are 3, 5, 7, 9. So we'll come to know about the tenant, and we surely do a due diligence on the tenant before we happen to take that particular property. Question from Maharaja. What is the investment ticket size and ROI? Kindly email me as well. I will do that just for letting you know for all. 10 lakhs is the minimum ticket size which we're looking at, and the ROI which we're looking out for is around 8% tax free, and IRR anything between 14 to 17%. Mr. Vinkaram, thank you very much. I'll just take down your details and I'll give you a call, and as well share the details. You've mentioned given your contact details over here. Question from Mr. Praveen. What is the quarterly payout vary with the increase of the rent as per contract terms with the tenant on a 2, 3 years? Yes. As per whatever the contract mentioned, the rental agreement, that is the how it will be deployed to your account. Uh, in the terms, it will be that's how it's going to be like. So if there's a rental increment, you will see a rental increment into your account as well. But yes, before you sign up, you will be able to see the cash flows for the next 3, 5, 7 years, and that will be taken. Yeah, Samir, you were saying something.
No, just to add, effectively, Praveen, it's a flow through pass through for rental because we have to give 95% whatever we received, we have to pass it on to our investors. So everything will be basically passed on to you.
What is the risk involved by natural calamities and war, Mr. Ganesh Kumar?
So I guess Ganesh, whatever is covered by insurance will be covered. So we typically make sure that all the properties are insured, so that any kind of calamities and war, your investment is safe.
Right. So, Mr. Vijay Kumar, what happens to maintenance charges when the premise is vacant? How would that money get adjusted? Mr. Kumar, we just like to mention that it's purely a relationship how a tenant and landlord is. The touch and feel or the physical asset is actually yours. So the maintenance surely goes in this particular product. How it will be adjusted, it will be, I guess, it will be show in the cash flow statement when you are applying for the IPO. Mr.
No, I
Srini,
guess Vijay. No, I guess the question from Vijay is, what if the premise is vacant?
yes.
So Vijay, as you are an owner of the asset, obviously till it's vacant, you'll have to bear the cost of that. But we as asset managers will make sure that we obviously help you with that because especially if it's vacant for a long period of time. But definitely we'll be there with you guys to make sure it's mitigated.
Question from Srinivas M. If we have an opportunity to invest in pre-IPO, would the price applicable for the pre-IPO be higher than the final IPO price? Well, I guess it's going to be the same as per the SEBI thing, compliance and everything. But having said that, Mr. Srinivas, when there is a pre-IPO, if there is, more than glad to share details with you, and let's be in touch. Question from Rajiv. The return of capital is not taxable at the level of hBits, but is taxable in the hands of an investor as per their slab rates of the tax. No, it is
Or
not.
tax-free.
It's not. It's purely tax-free. It's not as per the hBits. It's as per the taxation law under particular section. That is why we have gotten EY, our taxation partner, and once you look into it, we will be able to share that. So Kunal, thank you very much for sharing account details. Let me reach out to you and email you the particular details. Just make it, I'll share with you as well. Question from Santosh: are there any plans to convert existing hBits properties to SM REITs? Yes, there are. Moment we have finished our first IPO, we are looking forward to send across the consent to our same shareholders of the particular SPV, and we look forward to again migrate them to the SM REITs. Finally, the question, last one: do share the IPO details and deck of today's webinar. More than glad to do that, and that's our, that is one of the most important thing and my job, wherein we need to send across the recorded webinar, the IPO details, and we love to have all of you invest in our properties. There's a question from Mr. Rajesh: to get benefit of long-term classification, do I need to hold the units for 2 years or 3 years? Long-term is after 1 year, I guess.
Yeah, Rajesh, I think the new regulation, it's 1 year where you have to pay 12.5%.
Correct.
The new classification, and you don't get any inflation adjustment. So I think it's going to be 1 year.
Great. So I guess that's about the questions. Again, thank you all for taking out time this Friday afternoon. The questions were simply exciting. And kindly excuse me, I just went on a sprint in between to answer all of them within the time. Thank you, Samir, for being part of this webinar. As always, you're in Singapore now. Last time you were in San Francisco, then you were in New York. Soon, I know your other locations, but always available. Thank you very much. And thank you everyone, and please visit us
thank you everyone.
Please visit and follow us on LinkedIn for regular updates. Insta, which gives you a kind of a push notification over there, and you can write me at abhimanyu@hbits.co. Please remember how to buy and where. Yes, we'll be looking at the question from Kalyani. Well, we'll be looking forward to send across, and it will be listed through your IPO, through demat. That's how you can buy. Mr. Kalyani, please be regular visit to our, and we'll surely, since you're registered on this webinar, your email ID is captured. We'll be sharing the process of the same when moment we have our IPO in place. If just in case there is any other query for anyone, please feel free to email me. And of course, most of you guys have my number. More than glad to answer all the questions. Thank you very much. A very good evening. And
thank you.
A great weekend ahead. Thank you very much. Bye-bye.
Thank you so much. Cheers. Bye. Thank you. Thank you.
Bye.